Welcome to a Wiser Retirement Podcast. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today is my co-host, Missie Beach.
Hey, Casey.
Hello. So, Airline talk is taking over the podcast today.
Wow.
We will acknowledge that we have many clients who are not in the airline industry, but the airline industry, specifically pilots, is something that we specialize in as well as other specialties. But we decided to take a podcast to talk about the different retirement offerings from the various majors. So today we're just going to focus on Delta, American, and United. It is a great time to be an airline pilot.
Oh, that's for sure.
Financially speaking, for sure. Many people know about my aviation background. As I was building Wiser Wealth Management, I was flying at a company called Atlantic Southeast Airlines and did most of, they call it stand-ups, basically flying at night, early morning, so I could be here during the daytime. And that's how Wiser got built. And therefore, a lot of my things that I do personally are all related to aviation, at least certainly prior to kids. But we work with a lot of pilots. We manage assets for them, and as well as doing a lot of fee-based or flat-based financial planning.
Oh, that's for sure. There's a lot of pilots that come through our doors. And you're right. A lot of them right now are just kind of hourly planning clients. But I feel like once they come through the doors, they see the value of the planning process, and some hand over their assets now, but definitely once they hit that retirement phase.
Yeah, we should be clear that we don't believe that any pilot should be, or really any person should be paying for assets under management on their retirement account at the airline. So the 401k plan. So in most cases, old 401k plans, you want to roll those into your existing airline 401k plan. And we do not charge an asset management fee. We have competitors who do, and you're going to end up paying them, if you use them, you're going to end up paying them over $2.5 million in fees over your career, assuming you start in your early 30s at one of these majors. We're talking to more young people, which is really exciting, but kids, these are kids 25 to 28 years old, getting first airline job. Or I guess really their second. They're at a regional for a very short time period and they hopped over. But man, what a benefit. Because I remember my first job was flying a Beech 1900 for Colgan Air at a Bar Harbor, Maine to Boston under the U.S. Airways banner. And I'm pretty sure I may have been paid $18 the second year. I think it was around $14 that first year. It cost me more to go to work than I made.
Oh my gosh. But you're willing to pay your dues.
But I was willing to pay my dues to move to eventually ASA. And I thought that my career path would take me to Delta, but Wiser grew so fast, I had to make a choice and tend to be more of a homebody, I guess.
Good choice, Casey. Good choice.
Right.
I thank you.
So now what I've done is worked really hard to educate the Wiser team about the life of a pilot. Mm-hmm. And a lot of times we'll either explain things you hear in meetings,
jargon,
the jargon. Yeah, exactly. So I would say, Missy, you're have definitely earned your first officer wings on the way to captain really fast on your pilot knowledge.
I feel like I should get some plastic wings.
That's right. I'm not sure we even have those anymore. These two. All right. So let's get started. I want to focus on just really the highlights. We're going to focus on retirement choices, 401k plan choices, the cost of the 401k plan. Disability is important. Statistically, pilots are going to be disabled prior to somebody else just because of what it requires physically to fly, and which you can't have and fly airplanes, right?
Yeah, we have a lot of pilot clients that come in while they're on disability. So It's very common.
Yeah, you don't want your pilot having triple bypass and then coming back into work a week later, where you could probably pull that off in an office job if you really wanted to. But and then we'll also focus on the life insurance component of each airline. So let's go ahead and get this started. We're going to start with United. I think they have the most complicated to understand features of their retirement system. So first of all, when you think about putting money into a 401k plan, there's a period where you can max that out. So typically it's if you're earning over $255,000 a year, and you're putting in your maximum $22,500 or 30 if you're over the age of 50, you're going to hit that ceiling between your contribution and the company's contribution of $66,000 for this year, 2023, into the plan. When that happens, then that overage would just flow into your paycheck normally. But United has a very different system. So they have what they call an RHA, an active RHA plan, and then the RHA that is focused for retirement health care. So anything that you would earn in excess over, so they're putting in currently, well, starting in 24, they'll be putting in 17%. So whatever you make, they put 17% of that into the 401k plan. The RHA will house anything over that. Now, in addition, when you're flying, so your credit hours for the month, they're putting $1 per credit hour into what they call an active HRA. And so the active HRA is kind of like what we would call an HSA in our world. So that's money can be used for healthcare. So $1 an hour. So if you credit 150 hours, $150 goes into this account. You can use it toward medical. And then anything in the overage. So in January, anything over 15,000 gets rolled into the retirement health account. In June, anything over $5,000 gets rolled into the RHA, so the retirement health account. Once it's in the retirement health account, you can't spend it until retirement or you separate from the company.
That's the key. Okay.
That's the key.
Yeah.
So the problem for higher earners, which has happened more recently, is that you're putting way too much money into your RHA.
Into the healthcare side of your
side
savings.
of retirement. Yeah, correct.
Which sounds good, but in theory, that's a heavy weight towards healthcare
Correct.
savings. Yeah.
So to help solve this, they've launched a market-based cash balance plan, which will be in 24, which allows you to choose where do you want your average to go, into the market-based cash balance plan or the RHA. Now, neither one of these can be managed by you. It's basically managed by a third party that's handling it very conservatively. So let's assume 40% stocks, 60% bonds is how that would be handled. So that's good. I will note that United, American, and Delta, all by 2026, the company puts in 18% of what you earn annually into your retirement accounts. So they're all pretty even when it comes to that. So anyway, I hope I'm explaining that very simply because I had to read through a lot of information to get through that. Get there.
And for United pilots that are new to the market-based cash balance plan world, we should mention that that's like a general retirement account that would not be segmented only for healthcare expenses. So,
that's correct.
A lot more flexibility, and that would be a better target for those excess dollars than just the RHA.
You're right. Or taking it and paying tax on it.
Amen.
So the market-based cash balance plan at United appears that you can turn it on and turn it off during certain time periods as to where you want your excess to go.
That's good.
The American is also having a market-based cash balance plan launched. Now, at the time of this recording, the union, so the Allied Pilots Association, APA, they're not ALPA. So backstory there is basically when TWA pilots got stapled to the bottom of the American pilots, which was ALPA, I guess at the time, the TBA people got angry and removed ALPA and then became Allied Pilots Association. As a very much of an outsider, I don't know if it has really benefited them. Maybe just firing ALPA was enough and they didn't care after that. But I would say that there is a push internally to bring ALPA back to the property. But I think they seem to be the kind of the last to get a lot of the features compared to Delta and American. But I say that
Delta
to say
and United.
Yes, you're right. Delta and United. I say that because we believe that the market-based cash balance plan there can be opted in and opted out over time. But their website was hacked and now it's being held for ransom. So the people that were trying to help me, it's like, hey, we can't get into anything. But they did find some old contracting documents that were sent to me, and I was able to read through those. So it appears if it was voted in as it was written, then that you should be able to opt in and out inside your market-based cash balance plan. Where at Delta, you're in now, or you're out. If you elected to be out, you can't get back in. And if you're a new hire there, you're just in.
Yeah.
So these market-based cash balance plans, we'll link to our video on this, but essentially it's kind of a no-brainer not to do it, because if you're already being taxed at these high rates, so you've made over 255 in many cases, especially if you're making over 400,000, you run into a situation where you're being taxed at that 37% tax rate, especially depending on what state you live in. So to say that you could take that money yourself and invest it and catch up with the market with up to a 37% deficit is statistically impossible. Wall Street can't even do that.
No.
And if you did do it, you took tremendous amount of risk.
Yeah.
You put everything in one cart and said, I hope this makes it, right? So it's kind of a we did the numbers on that, and we have a podcast actually about that, and then we also have some videos we'll link it to our show notes here. So going back to United, let's shift gears for a second, and let's talk about investment options. So when you look at United, American, and Delta, they all have very similar investment choices, as they should, based on the size of their plans. The United plan, I will say, if you stick to the asset allocations that are in the core asset classes, like large cap equity index, small cap equity index, bond index, the pricing is very competitive to the other airlines, and probably the lowest in the business.
Oh, good.
Period.
Yeah.
There's really no reason why you should be investing inside a brokerage link inside of any of these plans. You have very, very low cost inside the plan. The people who are doing brokerage links are typically more stock pickers. And the companies that are trying to drive you to the brokerage link are after your money, and they're charging 0.5% to 1% per year for your entire career, which adds up to millions of dollars in fees. So in the end, just remember this, there's a SPIVA report that's put out every single year. And that SPIVA report's by S&P, Standard & Poor's. They track all these managers versus various benchmarks. Mostly notable is the S&P 500. And over a 20-year period, you have a 2% chance of beating the S&P 500 by hiring another manager. So I promise you, our competitors that are trying to manage assets inside a brokerage link do not have the best of the best asset managers or even access to them. So in the end, to be that 2%, it's almost impossible. Over a 10-year period, it's 6% can beat the S&P 500. Now over like a 3 to 5 year period, it's around 35 to 40% in a good time. They've been doing this report for 20 years. So you can look at the different time periods, but ultimately, and that's when people advertise. That's when these companies advertise.
Sure.
We beat the S&P 500 for 3 years running or 5 years running. And the marketing department is really good at that, but it doesn't hold up long term is what we're seeing.
Well, no, so, it never tells you what happened in the fourth year when it was down 12%.
Right. That's right. So you want, I hate losing. I hate losing with a passion. That's what causes me to win. So in the end, you've got to focus on statistically what is going to beat or catch up or match the market, and that's the market itself. That's the S&P. These are these index funds inside your 401k plans. Now, another reason why those win is because the fees are so low. So at American, United, and Delta, you can build all these plans with costing less than 0.1%. That's great. I mean, if it was, a half a percent difference, that's a big deal. But when you're talking about 0.05% difference between the plans, you win. Now, in the United plan, if you go to the actively managed funds inside the plan, your cost increases greatly. So you have to be very careful if you're going to go with the active large cap fund over the index fund. You got to be sure that manager can beat that in the long run. Now, what's interesting is in the Delta plan, Fidelity's kind of knows that the indexes win. And so even when you pick the active large cap, you're actually half of that fund is actually in the index itself, and the other half is being actively managed, which is unique to the Delta plan. American's kind of the same way. If you get off the guardrails of the index funds, the fees will increase somewhat significantly. There's actually a lawsuit pending on the American plan, but it's not the pilot plan. It must be the employee plan, because they were running ESG funds inside their 401k plan, but there are no ESG related investments inside the American pilot plan.
Okay.
So that might be something different, but the S&P 500 itself has a very high ESG rating. You don't need an ESG focused fund when literally the S&P 500 has the highest rating by itself, which is a problem we run into with ESG focused funds. Is they underperform the S&P and have sometimes a worse rating than the S&P 500 itself. So that's kind of a gotcha, which I think the SEC is looking into rather heavily now with the greenwashing of funds.
Hey, fellow aviators. Before we dive back into this episode, I've got some awesome news to share. On our website, we've got a freebie just for you. Our team of financial advisors has done the legwork to provide you with free 401k allocations for all the major airlines. Getting your hands on your airline's specific allocation is a breeze. Just click the link in the episode notes or head over to pilotretirement.com. Now let's get back to the good stuff in this episode.
So based on the investment options, I'd say all plans are really close, as they should be. Let's shift gear a little bit. Let's talk about disability. So the United Disability Plan, basically after 60 days, you can qualify for the long-term disability. You're going to share in the cost of that plan. It's 25% of the premium. But there is a company sick bank that is accruing that allows you to pull from that sick bank. Now, this is separate from your personal sick bank. This is like a short-term disability like sick bank. And you can pull from that bank until you qualify to be on long-term disability. How it all accrues it was a little complicated, so I'll stay out of the weeds on that. But max monthly benefit in the plan is right now is $13,521. Goes up a little bit in 24.
Okay.
American has something very similar. Long-term disability is basically 120 hours. And you get your extended sick bank to get to long-term disability. You can choose there if you want to have it taxed as a benefit or not taxed.
Yeah, I'd say always have it taxed so you get that after-tax income if you're on disability.
Correct. So basically, if you pay the tax now, then it comes tax-free later. Yeah. Which is what you want, because the payout's going to be higher at a time when you probably don't need any additional expenses.
Exactly.
Both plans appear to be at 50% pay. And then we roll into Delta. So the Delta disability is 50%, but no income limit. And then it has a 182-day elimination period. And then Delta is the only one that seems to be offering, and I always butcher the name of it, but it's basically a plan that allows for 100% coverage for the first year that you're on disability. There's 2 years worth in your lifetime there. But you can use a year at a time. And the name escapes me now, but all the listeners are going, you're yelling at me.
Yeah.
It's like Family Mutual.
Yes.
Family Mutual Assurance or something like that.
Exactly. I know what you're talking about too.
Delta's the only one that carries that. That's not really offered in the other plans.
And also what they do at Delta, if you're at on disability making half your pay, they bump up your 401k contribution from 16% to 32%. So their company contribution to the 401k remains whole, even though your pay is reduced 50%.
Right.
So we've had clients in that situation before, and they're not losing any ground on company 401k contributions, which is really great.
Yeah. And again, there's a lot of things that don't allow you to go fly that can persist for a longer time period where I can still come to work and work here just fine and no one knows anything was wrong with me.
Absolutely.
So that's why it's so important that when you choose an airline to work for, that you're choosing one that has a good disability plan.
Absolutely.
You don't think about that. You just want the job.
Yeah.
And we're not even focused on hourly pay or who's getting paid the most to fly which aircraft. I have looked at that. It's all very similar.
You know who thinks about it more are the spouses. When I'm sitting across the conference room table from a couple, it's the spouses that are like, well, what if you lose your medical? What are we going to do?
Yeah.
And so they're the ones that think about it more than the pilots.
The non-working spouses.
Yeah.
Yeah. Or the ones that had to go out on disability for a year and realized that they're not invincible.
Yeah.
I've had a few conversations like that too. Okay. So let's talk about life insurance. So Delta's rolled out a new option. They have a group term. They have the best retirement or life insurance option. The company pays for $1 million next year, $1,068,000 in a group term life policy. But they're also rolling out a guaranteed variable universal life policy.
Yeah. Group universal life.
Yes. Thank you.
Exactly. So I think it's kind of a no-brainer to go with the GVUL policy.
Why is that?
Because
normally we're not really big on those kind of policies.
No. This is like an exception to the rule, I guess, Casey. But in this case, as long as you're not adding any additional money into this universal life policy, keep it all things equal. The death benefit equals the death benefit, same amount, $1,068,000. But the premiums are actually lower on this GVUL policy. And since the premium is imputed income to the employee, it's better to take the GVUL coverage over the term policy.
So imputed income is basically, it's by the IRS. So if you have a life insurance policy is worth more than $50,000, you have to pay imputed income tax on it.
Exactly.
As a benefit.
So you're going to have a little bit more in your take-home pay if you switch over to the GVUL policy versus just that standard group term policy that everybody's used to having.
Then it goes off the rails.
Oh, yeah. That's what they don't show in the marketing material, right?
In the marketing material, they were really, really good to show your tax savings.
Oh, yeah. Great.
So MetLife has a great chart. I'm sure all Delta pilots have seen it. Have a great chart of why you should use the GVUL. Now, after that, it's very vague.
Oh, yeah. There are no numbers.
There are no numbers. And they talk about saving tax deferred is better than saving through a taxable account. And they have this little chart that goes from left to right and it's still very vague. That's because the math doesn't add up.
Yeah. It's your typical universal life, pitch.
Yes. So what they want you to do, MetLife, not necessarily the company, but what they want you to do is now add more money to that policy.
To build up a cash value.
To build up a cash value that you can borrow from in the future.
How convenient.
Free.
Oh, yeah.
You just pull it out. It's free money, right? You have to remember what the cost of that is. So you're going to pay 2.25% per year in fees. There aren't even mutual funds. They can't call them mutual funds legally. They have to call them mutual fund-like accounts. They're actually called separate managed accounts. But when you're going to pay a 2.25% fee for that. And then you're going to build up this cash value in the plan and it can grow tax deferred.
Right.
All right. With a 2.25% drag, you could also go build a very tax efficient ETF portfolio, do tax loss harvesting on an annual basis, and you'll be way ahead of this chart that they show you.
Yeah.
So what we're telling Delta pilots is participate in the GVUL because it does save you in taxes. Do not add anything extra to the plan.
Exactly. Keep it simple.
Yes. Just life insurance is life insurance. Your investments are your investments, and they should never be merged in.
Correct. And we should preface all this by saying it's not a huge amount of tax savings by switching from the group term to the group VUL.
Yeah.
I mean, you're not going to see a massive difference in your take-home pay. It's going to be minimal.
Right.
But, take every dollar that you can.
As my grandmother said, every penny, if you manage your pennies, the dollars take care of themselves.
Yes. Go Granny.
All right. So
that's Delta.
United has a very similar offering in that they have a group life insurance at $750,000 flat. And then you can also do a variable option of that if you would like. And they've had that for a while.
Okay.
So again, sounds like you take the group variable to lower your imputed income tax and then don't use it as an investment. Now, American does not offer the group variable. They have a flat $750,000, which has been substantially increased under their new contract. So, maybe a little lacking there, but you can, I know you can pick up additional insurance paid by you as far as group policies go.
And, while $1,068,000 may sound like a lot of coverage, all the pilots that we do a life insurance needs analysis are underinsured at that $1 million level. So
correct.
Pilots should not be shocked when they hear us say or hear anyone say that you need additional coverage.
So additional coverage can be gotten fairly economically through ALPA. They have a 10-year flat fee term period and then a 20-year period. And there's also more of like a group policy. It just increases a little bit each year based on your age. I still have my ALPA login. So for Delta and United pilots, I can often log in and kind of tell them what that fee would be by looking at a schedule as if I was trying to get a policy.
Oh, yeah. Okay, super.
So that's optioned for you. And then for those at American, I would just find a insurance broker. Mm-hmm. We have several that we can point you to that could pick up additional life insurance for you should you need it during your planning process. So in the end, I think that they're all very competitive. If you were trying to decide which airline you want to work for, and you were listening to this podcast, is maybe one has better benefits than other. They're all kind of the same, really, in the end. Mm-hmm. I would say go for quality of life. Try to pick a airline that you don't have to commute to work, or it's an easier commute if you live not in a majors hub. But it's definitely no doubt. I think I just saw Delta's going to be hiring 200 pilots a month through first quarter of next year.
Wow.
American is way behind as well. They have the most people leaving at American.
Like retiring?
They have the most mandatory retirements over the other two right now.
Wow.
So there's definitely a shortage. This is all on the heels of the VP of operations at FedEx just sent a letter to all the pilots saying that cargo loads were falling back to 2019 levels and that they should consider going to PSA, which is a regional airline, which caught my eye. I was like, what the heck? And I sent a message to somebody because I saw it in the news. And then they sent me the actual letter and I read it and it's real. So you're telling the freight guys. So Missy, back when Delta was struggling, everybody was jumping ship, going to FedEx and UPS. That was the most stable. You always got to fly boxes. Yeah. And it sounds like they got a little over their skis during COVID because the shipments just rapidly increased because everybody was home buying stuff and goods had to get moved around the world at a higher volume, where now that it's pulling back to 2019 levels tells me that it's returning to normal. It's not that cargo carriers are going to go out of business. It's just, it's returning to normal. I will say this though. No one really talks about this. I'm kind of a space nut, and you look at what some of the things that like SpaceX is doing right now, they're acquiring these old oil pads like out in China. And basically in their largest rocket, I'll spare everyone the nerdy details, but basically in their largest rocket, within probably the next 5 years, you could take a 747 load, you can put it into the cargo hold of this rocket, and you could launch it from like the US to China, and it would be there in less than, I think it's like less than 2 hours or something like that.
Holy cow.
Actually, may even be under an hour. But
at what cost?
No, they're saying that the economics of it is going to be cheaper than flying a 747 across the pond.
Wow.
Isn't that crazy?
So SpaceX is going to get into like cargo shipping.
Well, that's what they do now. They take cargo to space, dump it off, come back.
Okay.
So the world's definitely changing. I think it's a great time to be flying people, because I don't see people subjecting themselves to that kind of a flight across the pond.
I'm not signing up for that. No.
But yeah, go Google that. Look that up. It's actually really fascinating what's going to be coming, and you kind of understand maybe why Elon has a bit of a target on his back, because he's becoming bigger than whole governments at this point. Well, most governments, but even the US government in some sense.
Pretty cool.
It is pretty cool. But yeah, it's going to be a very different world in 10 years, especially as technology changes. We already have a push for a one-person cockpit in commercial aviation, which ALPA's fighting against that, obviously. But with technology coming in newer airplanes, like, why do you have to have that second pilot?
Because I want people up there flying.
And I think that wins public opinion right now. But as you have autonomous cars, which turn into small autonomous craft, which then, right?
No, I'm not going.
You're going to make that leap?
No, not going in the driverless car. No, not going in the one person aircraft. No.
I mean, it's coming.
Okay.
It's coming.
I'll be gone.
Well, you kind of see it in the Writers Guild right now, right? They had that strike because they wanted to limit how much AI can do writing, but they're just pushing off the inevitable.
I guess so.
I mean, there's a period where we didn't need buggy whips anymore,
and
those companies had to go out of business, and people had to make something different. But
everything adapts. You're right, Casey.
That's right.
Wow.
So anyway, thanks for listening. I hope we didn't create more questions through the process, but I thought this was a good opportunity to do a compare and contrast, as each of these airlines have ratified contracts recently. And if you're thinking about working at one of these airlines, again, I think I go down to what's a good home base, and maybe a little bit about employment group. I mean, things are still a little hot and heavy, from what I understand, over at American because of mergers or lack of mergers, I guess, with America West and American. There's definitely some hostilities there, where Delta hasn't really experienced that with the Northwest merger. And, I don't know. I know people who love United, and I have people who worked at United and went over to Delta. We have one client that was at Southwest in training, got his job interviewed and got a job at United. So he left Southwest, went to United, and then Delta interviewed him. He was at United for almost a year, and then he went to Delta.
Oh my gosh, making the rounds.
15 years ago, you've been lucky to get one of those interviews or one of those jobs. So it's amazing. A totally different world now.
Well, and they all have great benefits, so you can't go wrong benefit-wise.
But all right. Thanks for listening. Again, we've got some other podcast episodes you might be interested in, focused around airlines. Episode 173 is making the most of your airline 401k. On a Wiser Retirement YouTube channel, we have Delta Pilots Market-Based Cash Balance Plan, tips for airline pilots approaching retirement, avoid asset managers looking to manage your airline 401k. Those are all in our show notes. You can see those on the YouTube channel. And then we also have a pilot center. You can go and download free allocations for your 401k plan, and you can learn more about our financial planning process. That's also linked. The Pilot Center is also linked in our show notes. Thanks for listening to today's episode. If you're interested in learning more about Wiser Wealth Management or want to schedule a consultation to meet with Missy or I, who are fiduciary financial advisors, you can do so by going to wiserinvestor.com or click on the episode show notes below. Thanks so much. See you guys next week.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening, that way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley. This podcast is strictly for informational purposes only and is not to be considered as investment advice or a solicitation to buy or sell any financial products, securities, digital assets, or any other investment vehicles, or a basis to make any financial decisions. Wiser Wealth Management Incorporated is a registered investment advisor with the SEC. The host and/or guest may personally own securities, digital assets, or other investment vehicles mentioned on this podcast. Neither the host nor guest of the show are compensated for their participation, and no referral fees are paid to or received by any host or guest for clients, listeners, or similar interests. Investments involve risk, and unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified financial advisor, tax professional, insurance professional, and/or legal professional before implementing any strategy discussed herein. Past performance is not indicative of future performance.